I want you right now to be prepared to be overwhelmed. Next week is the most important week of earnings season, and we're coming in hot, sizzling. Thanks to the rallies from the bottom this week. Wow, remember Monday? Including today, where the Dow gained 238 points, S&P jumped 1.01%, and the Nasdaq climbed 1.04%, all to record highs. Well, that means there's no room for error. It's very easy to make mistakes during this period. For example, what happens on Monday? Well, Tesla reports. Tesla. I am urging you to wait for the conference call, not just look at the headline numbers, because we got to get a sense of how Berlin's doing. The pickup truck, the one that looks like the Aztec that Ford Motor says is going to be crushed with the F-150 electric, and how Elon Musk feels about, yes, the Chinese government. Tesla's one of the few big companies with a stock that's well off its highs, so it should have an easier time rallying on good news, although people like momentum, it doesn't have any. But come Tuesday, we hear from a bunch of big companies with stocks that are at or near their highs. Why don't we start with Apple, okay? Now, we're going into a big launch. All the new models will support 5G, and there should be an incredible number of upgrades. The wireless I always try, but the only time it's worked is when I put tape on it. The wireless carriers are happy to subsidize Apple's $1,000 phones. Yeah, take a look at that AT&T quarter. That's how they made their numbers, I think. Hopefully, Apple will start breaking out the lifetime value of customers this quarter, thanks to this increasingly sticky service revenue stream. Remember, you get the phone, you take all these other things, and next thing you know, you get that bill at 3 a.m. and you pay it without even knowing it. All right, then there's Alphabet, which should be amazing, given that Twitter and Snap both had incredible numbers last night. Snap was amazing. Snap was really unbelievable. Now, I don't know what to be excited about here. Which more? Maybe the booming ad business at Google. YouTube doing so well. How about the red-hot Google Cloud division? Watch their cash hoard. It continues to build. Pull the cash out to get a better valuation. That's how you have to measure what the price earnings multiple should be. That same afternoon, we hear from Microsoft. All right, these big tech companies are driving me nuts with their endless rallies. If one more brokerage raises its price target from Mr. Softy ahead of the quarter, I am going to lose it. I'm going to shine my shoes. Trust me, I haven't had them shine lately. Normally, the analysts underestimate Microsoft, allowing the company to easily beat expectations, but this time the stock may actually head lower. Why? Because, the expectations are finally catching up with them. My Charitable Trust owns it. I'm not concerned. I'm not trading it, but just be aware. Now, just like last earnings season, Intel once again put the kibosh on the entire semiconductor industry when it gave its conference call, painting its company-specific problems as universal to the industry. Sometime you got to keep that in mind when Advanced Micro Devices reports. Under the brilliant leadership of Lisa Su, AMD has surpassed Intel in terms of giving its customers what they want. I hope she can announce its closing date for the Xilinx acquisition, because the arbitrage pressure is dragging down the stock more than the earnings can lift it. If all of those high-profile quarters weren't enough, well, Wednesday brings the tortured conclusion of the Federal Reserve's meeting. Once again, unfortunately, Fed Chief Jay Powell will once have to respond to a Zoom Hollywood Squares worth of reporters who are eager to prod him about inflation and when he'll start tapering bond purchases. This is too important to ignore, but I don't expect any meaningful news. See, Powell's gotten the hang of it. He knows this is not the forum to say anything that could move the needle. He's too smart for that. Wednesday morning, we hear from two recent underperformers, Boeing and Bristol Myers. I expect them both to be weak again. I can see Boeing giving you a terrible number. What's good? Anything good happening there? And then telling you they may even have to raise more money. Yeah, it could be what I call a 1-2 punch. But those punches might be worth enduring because air travel is already coming back. And once we triumph over these new COVID variants, I expect the airlines to place very big orders. Did you hear Gary Kelly yesterday from Southwest saying they may need more planes? That was a big news item, and no one cared. I don't know. What's news these days? We also get results from McDonald's. Now, to me, this one's really starting to feel like an unstoppable quick-serve name, just like Chipotle, just like Domino's, just like Starbucks. I think people are coming back to the stores, so McDonald's will guide up numbers and people will buy the stock. And that's pretty much par for the course in this remarkable and remarkably positive earnings season. I'll take it, especially because, remember, no one really thought this earnings season was going to be any good, and you can count on one hand the ones that have been disappointing. By Wednesday night, the analysts will be completely overwhelmed, so don't try to trade Facebook until you hear CFO David Wenner give the guidance. Yeah, you got to go through Zuckerberg, you got to go through Sheryl Sandberg, and then Wenner speaks. Wait for that. I think this is the quarter where we'll hear more about small business than you will hear about monetizing Diem, that's their stablecoin, or making a couple billion off of virtual reality. I don't expect a coronation, but let's just say it'll be tough for Facebook to have a bad quarter. Online advertising is too strong, and what they're doing for small to medium-sized business is too visible. Then there's Ford. Now, we know all about the semiconductor shortage and how it hurt the automakers by forcing them to curtail production. It certainly hurt Ford to the tune of a couple billion. This week, we heard from other car companies that numbers have to come down. But what if Ford has found some chips? Yeah, but I think numbers have to go up here. Up, not down. Because the cars and trucks are simply better than they used to be, and the markets they operate in are more profitable. No, I don't expect this quarter to be good. That's not what I'm saying. I'm saying that 2022 could be good. Next, cross-border travel make a comeback, can it? I heard a really good conference call today with American Express, so it made me put MasterCard up here. All these COVID variants spreading like wildfire, maybe you think that it's not right, but wow, that Express quarter was fantastic. I think MasterCard is going to tell us a good story, too. Thursday evening is none other than Amazon. Will the stock go into space? Some would argue it's already there. I expect a Spartan conference call that reveals big record numbers in retail and Amazon Web Services, but not much explanation. I think the high-margin advertising business will be the star of the show. Same reason I like Alphabet. I mean, faithful to the stock. And of all the conference calls that I have to read, it is the quickest one, which I am so grateful for. Another company that I'm betting will surprise the upside, Twilio. We had them on last time, probably about a month ago. Anything that helps businesses gain clients is going to shine this quarter. And Twilio is the best in the house when it comes to making it easier for companies to send messages to their customers, personalized. By Friday, you and I will be exhausted. But we want to hear what ExxonMobil has to say, and we want to hear what Chevron has to say. Now, I urge you to go into both of them with an open mind. There was a time when I thought the oils were uninvestable because too many younger money managers care about the environment. But you know what? The major oils have gotten religion on this issue. Are they making serious efforts to fight climate change? Look, they're still oil companies, but they're at least making an effort to offset the damage. They've spent a great deal of time and money trying to shrink their very big carbon footprints. It might not save the environment, but it makes it easier for money managers who care about the environment to also own their stocks. This will be the first meeting for Exxon since management lost a proxy contest to a bunch of environmentalists. The ghost of John D. Rockefeller must be furious. Read the Chernow book. It's unbelievable. But the Earth is a happier place. Just when you think you finally made your way out of the morass, Caterpillar reports. The stock's been down. No infrastructure bill, perhaps a slowing in orders, but the stock's decline makes me comfortable buying a little right here, right now. Could be a big second-half turn. Remember, one way or another, I think we'll reach herd immunity. And when that happens, the economy will roar. Here's the bottom line. This is the toughest week of the quarter when it comes to making informed financial decisions. There aren't enough hours in the day to read all the conference calls, which is really the problem, okay? I have to tell you, I left off half the companies I wanted to put on this board. Half. So do your best to focus on a few, including FAANG. And remember, right now, because of these reports, it's the earnings that control this market, not the 10-year or the Fed or the COVID variants, for that matter. I want to go to Charles in Washington. Charles.
Hi, Jim. How are you?
The chill is fine. What's going on?
I've been watching you since Kudlow and Cramer.
Holy cow! And you must be 90.
And I'm a member of Action Alerts Plus.
Thank you.
And I have a question about Activision Blizzard. They had some negative news on the 21st and 22nd, and I bought that stock back in the days in single digits, and I've never sold any. And it's 27% of my portfolio, and I'm wondering, do you think it's time for me to take some profit? I don't know.
I know that the accusation. I don't know. I mean, the frat boy culture. I don't know. I know Bobby Kotick from when he was like a little boy. Here's what I do know. I think Activision Blizzard is a well-run company, but all these companies, and it could be Take-Two we're talking about, are viewed as pandemic plays. And you don't get the benefit of the doubt when you own a video game company. You got to wait 2 quarters, and then you can do it. All right? You got 27%. I would trim it. Take it down to 15. I'll feel a lot better. I'll sleep at night if Charles cuts it to 15. Marcy in my home state of New Jersey. Marcy.
Hi, Jim. Thank you for taking my call, and thank you for all that you do for us.
You're very kind. Thank you.
I'm a longtime fan and a second-time caller.
Excellent.
And I love the picture of your rescue dog, NVIDIA.
Oh, I miss NVIDIA. I got NVIDIA the second, but he's no NVIDIA. got a lot of NVIDIAs. Go ahead.
And I love the picture of you in your garden wearing a suit.
Oh, I like to wear my Brioni when I garden, except for on Sundays when I usually wear Xenia. It's important. You have to be stylish. Okay, go ahead.
I get it. My question is about Nucor, the steel company.
Sure.
It beat estimates yesterday.
Right.
And it's a financially solid company, yet the stock continues to go down. So, Jim, is this because the infrastructure bill is stalled in Congress, or are there other factors, and should I sell?
Okay, first, thank you for all the kind words. This is in the new NVIDIA, by the way. Second, here's what you have to know. Leon Topalian was on this morning speaking to Becky on Squawk Box, and she did a great job, and Leon was terrific. But people feel it can't get better. It's as good as it gets. It was the best quarter the company ever had. I have to tell you, that's complete nonsense. I think that if you look at Nucor's record, we're in year one of a multi-year cycle. There's no Chinese dumping. There's tariffs. Biden's not going to change that. I want you, as I did with ActionAlertsPlus.com with the club when I explained on the Wednesday call, I want you to buy more. I think it's a great level to pick up some more Nucor. And if it goes to the 80s, buy even more. Why don't we go to Steve in Florida? Steve!
Cramer, how are you?
Chief, I'm good. Help me. What do you got?
Well, I'm thinking about shorting Carvana, and I want to tell you why.
All right.
I've been in the car business for a very long time, and there's a big shortage in the car industry right now, and I'm thinking the acquiring of vehicles is going to be very, very difficult, and more difficult than it is now, with all the automotive financial institutions not allowing the leases to be bought by Carvana anymore, like Lexus, BMW, Honda, Toyota, Volvo, Infiniti, et cetera, et cetera. So I just think with them not allowing Carvana to buy the cars directly from the customers anymore if they're in a lease, you kill a huge pipeline.
Okay, well, look, I have to do more. The 20% of the stock is shorted. It hit an all-time high again today. We had them on. Business is quite strong. I want to do more work on what you just said. I cannot flippantly tell you, I don't know. Yeah, look, don't worry about that. That's a very interesting point. So I will come back. All right, next week. Next week will be the toughest of the quarter when it comes to making informed financial decisions. While there are many stories in the spotlight, the Delta variant, the Fed, and the 10-year, focus on what controls this market right now, because this is the biggest week for earnings. Mad Money tonight. Can a case of the Mondays be a good thing? I'm eyeing recent public Monday.com to see if it could make you some money. Plus, another electronic vehicle company just started trading on the NASDAQ. Feel like you're in the movie Groundhog Day? Well, you're not alone. I'm taking a closer look at Rio Automotive to see how it differentiates itself. And don't get too jaded. Plus, averages ended the week higher following Monday's drop in response to concerns about the Delta variant. After a volatile week where we finished at record highs, wondering if your portfolio has what it takes to succeed in this market? The favorite feature that people have. We are going to play MI Diversified. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.